Welcome back to the channel, savvy investors and curious minds. Today, we're diving deep into the fascinating world of hard-to-borrow stocks and potential short squeeze candidates. Our screener just flagged a compelling microcap in the consumer defensive sector, and it's Edible Garden AG Incorporated, or EDBL. We'll break down exactly why this stock is popping up on our radar. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Chart, EDBL price action. Let's start with the basics of Edible Garden AG Incorporated. EDBL operates as a controlled environment agriculture farming company specializing in fresh, packaged produce like cilantro, rosemary, mint, and their popular buttercrunch living lettuce and basil. This company is squarely in the consumer defensive/farm product sector, a space that can be resilient, but for EDBL, we're looking at a tiny market cap of just $1.06 million. In terms of recent price action, it's been a rough ride. EDBL is down a staggering 75.25% over the last 30 days, and nearly 20% in just the last 5 days. Today, it's seeing a slight bounce, up 0.82%. Volume is also significantly lower today at 641,401 shares, compared to its 30-day average of over 2 million shares. Highlight volume difference. What is cost to borrow and why it matters? So, what makes EDBL interesting for a short squeeze discussion? It's all about the cost to borrow, or CTB. When a short seller wants to bet against a stock, they borrow shares and sell them, hoping to buy them back cheaper later. But borrowing isn't free. There's a fee, an interest rate, paid to the lender. This is the cost to borrow. When this fee skyrockets, it's a huge red flag for potential short squeeze conditions. It tells you that demand to short the stock is incredibly high, or the supply of shares available to borrow is incredibly low, or both. Imagine trying to rent a rare in-demand item and the price goes through the roof. Why the stock is hard to borrow right now. And for EDBL, that cost to borrow fee is absolutely astronomical, 708.0% annualized. Think about that for a second. If you short EDBL, you're paying back over 7 times the value of the shares per year just in borrowing fees. This is a massive burden on short sellers. Combined with an estimated float of only 0.1 million shares, a truly tiny number, this creates a powder keg situation. While the exact number of shares currently available to borrow is unknown, that 708% CTB tells us the market for borrowing EDBL shares is incredibly tight. Squeeze mechanics explained. So, how does this lead to a short squeeze? A short squeeze happens when the price of a heavily shorted stock starts to rise unexpectedly. As the price goes up, short sellers, who are now losing money, face increasing pressure. They might get margin calls from their brokers, forcing them to buy back shares to cover their positions and limit losses. This forced buying creates even more demand, driving the price up further, which then forces more short sellers to cover. It's a cascading effect. With Edible Garden AG incredibly small float of 0.1 million shares, even a small amount of buying pressure could have a dramatic impact, and at 708% CTB makes short sellers very eager to get out quickly if the price moves against them. Dilution risk check. One crucial factor for any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, which increases the total share count and can reduce the value of existing shares, effectively negating any upward price momentum. We're happy to report that for EDBL, our checks found no recent diluted SEC filings such as -1s, -3s, or 424Bs in the last 90 days. This means there isn't an immediate threat of new shares flooding the market and dampening a potential squeeze. Recent reverse split watch. Now, something else critical to note for Edible Garden AG, EDBL executed a 1/45 reverse stock split on July 13, 2024, which was just 16 days ago. A reverse split reduces the number of outstanding shares and proportionately increases the share price. For a stock like EDBL, this drastically reduces the float even further, making those 0.1 million shares post-split even more significant. Historically, many microcap stocks tend to see renewed volatility or a price pop within about a month after a reverse split, as the share price is reset higher and the reduced float can magnify buying interest. However, this is a pattern we've observed, not a guarantee of future performance. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with EDBL? While the 708% cost to borrow is extreme and the float is tiny, it's vital to remember that a high CTB does not guarantee a squeeze. It could also mean short sellers have very strong conviction that EDBL Garden AG fundamentals are weak, and they're willing to pay dearly to stay short. Keep an eye on EDBL's volume. Today's volume is only 0.3x its average, so a significant spike in buying volume would be a key indicator. Watch for any positive news or catalyst related to EDBL Garden AG business, which could act as a trigger. Our internal composite squeeze score for EDBL currently sits at 45.2 out of 100, indicating moderate potential, but certainly not a sure thing. EDBL Garden AG Incorporated. EDBL presents an intriguing profile with its sky-high 708% cost to borrow, tiny 0.1 million share float, recent reverse split, and a clean bill on recent dilution. These factors certainly align with conditions that can lead to significant volatility. But always do your own thorough due diligence and understand the risks involved with highly speculative microcap stocks like EDBL. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth analysis of hard-to-borrow stocks, and let us know in the comments what stocks you'd like us to cover next.